Hi, welcome back to my channel. Thanks for joining me again. Okay, so I've had some feedback regarding the videos. I've posted a couple over the last couple of days. Had some mixed feedback, which is great. It's great getting feedback. Otherwise, you don't know whether you're doing well or you're not doing well. So the feedback I've had is a bit of a mixture of both. Some of it is not very clear on what you're trying to do, which is great. So I'll change the approach on this. So as I said in the first video that I did, the main reason why I'm doing this is to document a portfolio, sort of what I'm doing, because this is a fantastic way of doing it. And the second reason why I am doing this is because if there's somebody else that's wanting to get into the markets and have a go at doing this, then that's how I started. I picked this up from somebody else, and then I started watching videos, and I started going on courses and bits and pieces, and 4 years later, here I am. So what I've decided to do is put together some short videos on what I believe you need to understand if you want to start trading. So there's a few just to make you aware, these items that I'm going to cover, these aren't the be all and end all. These are the bare basics of what you need. So the first one we'll do is we'll actually have a look at TradingView itself. So this software, what we're looking at now, is TradingView. There are a multitude of trading softwares out there. I mean, there's loads. So I mainly use TradingView, and I also use MT4, which is MetaTrader 4. Currently, I'm only using TradingView, but I dip between TradingView and MetaTrader 4, depending on what I'm doing. So what I'll do is I'll have a run through of TradingView, and I'll show you the different aspects of it, and show you how to actually look and set up, and I'll actually show you how to run through and set up the charts of what I believe is the fundamental start of trading. So what I mean by that is the first thing we need to understand, and what I was taught, was support and resistance. Without support and resistance, you'll find it difficult to actually work out where there is actually support, what the support means, what the resistance means, and what you can do between a support and resistance zone, basically. That, I believe, is the first thing that we need to cover. The second one is MACD. I don't use MACD all the time, but when I do use MACD, it needs to count. The third one we need to cover is EMA, which is exponential moving average. Now, exponential moving average is great. It's a great way of looking at the market and understanding if we're trending, if we're not trending, if we're trending up, we're trending down. It's a great way of interpreting what we're actually doing. As in, is the euro against the dollar moving up? Is it trending down? Or are we just consolidating and moving right? So there's a few different ways you read and understand exponential moving averages. So I will cover the ways that I use them and how I analyze the chart with an EMA. So the next one is Fibonacci retracements and Fibonacci extensions. I use these every single day of the week, and I use them because they are a fantastic tool to have. So what I won't do with Fibonacci is I'm not going to explain the history of Fibonacci. I will link some links to other YouTube videos that I have seen throughout my time, and they will explain exactly what the history of Fibonacci is, because for me, I find learning this the old takes of the history of these indicators. I find them very fascinating, and hopefully you will too, because they'll explain a lot about why things are made the way they are, and you'll find Fibonacci in everything that you see, even things from your ears to your body, your ratios. There's a lot. So when you see it, hopefully you'll understand a bit about the heritage of it and the number sequencing. But what I want to do with my video is show you why I use it, how I use it, and what I'm looking for when I do use it. Okay, so that's the main thing that I need to get across to you guys. The next one is Bollinger Bands. I have a setup that I do, which I'm looking for basically a stretch and retrace from the Bollinger Band. So I will show you this, and I'll show you the pattern. I'll show you some examples, and I'll show you what I look for again, when I look for it, how I look for it, and why I look for it, and why it's relevant, basically. Okay, so moving forward, then I need to show you about basic candlestick patterns. So when I'm trading, most times you are looking at patterns that have happened many times before. So patterns are always repeating themselves constantly, and what you need to understand is what the patterns are, what they actually mean, and how to actually use the pattern signal to be able to get involved with a trade. So this here is, oh hello, this here is fantastic, because to me the candlestick that counts in all of this is this one here, this reversal candle here. Absolutely fantastic. If you could get in at this candle and ride that all the way down, you'd have made some money. You would have made some good money there. So, but you can't just take a candlestick pattern by itself. You need to use the support, resistance, you need to use the EMA, the Fibonacci, you need to use all of that to be able to work out exactly what is going on. But first of all, this is a 5-minute chart. So what we actually need to do is understand trading view first, and look at the different, here we go, different types of charts. So what I do is I look for top-down analysis. So top-down analysis means we start on a higher time frame, we go out to the daily, and we'll actually look at what is actually trending, and we will put support and resistance lines on. We'll open up the EMA, we'll put the MACD on, we'll look to see if there's any Fibonacci extensions or retracements. I'll overlay the Bollinger Bands and see if we've got an exhaustion of the Bollinger Bands or a major stretch. And I'll show you basic candlestick patterns. So we'll go from daily chart, which is this. We'll go down to a 4-hour chart, which is this. So again, that looks completely different to this. So this to me looks like we're going up, but actually, in the grand scheme of things, the US dollar is actually looking like it's going down. So, but we need a lot more information on this chart to be able to determine what is actually happening. So the way I normally start off is I'll go daily chart, 4-hour chart, and then I'll go to hourly chart. I don't necessarily on Forex trading go down to 15-minute or 5-minute charts. I find they're too noisy. You get a lot of whipsawing, backwards and forwards and backwards and forwards, and it can confuse your judgment if you are going to place a trade. If you took every bit of information as gospel, you'd never place a trade, because if you put on, say, 20 different indicators, they'd all contradict themselves. So what you've got to do is you've got to do it in a strategic way. You need to know that if A, B, C, D does whatever, you know that your stars are aligned and you can actually place a trade. So again, I'll go through all of this in a lot more detail. Once we've covered these sort of core videos and explanations of what I do and how I do it, what I will do is I'll go into more detail of things like flag patterns. We'll go into things like breakouts, because even here you can see oh, here we go, you can see a fantastic breakout. Great, absolutely brilliant. There's a lot of different aspects to trading. So even here, when we're talking about candlestick patterns, that absolutely perfect. Perfect. Basically, it's equivalent to a a low test bar. which means the price has actually opened, it's gone down, it's gone back up, and it's closed higher than it opened. Which to me, once I overlay all these other indicators, that more than likely would have been a very good trade. So, like I say, this information that I'm going to be going through, this isn't teaching. This is just me explaining how I use them, when I use them, why I use them, and hopefully you can take away a little bit of value from this video, and you can potentially set up charts. You can start having a look. I don't trade a demo account because for me there's not any value in me trading a demo account. I'm kind of past that stage now. But anybody that is wanting to start trading but can't afford to start trading, what I would advise is opening up a demo account. On TradingView, you can actually have a, oh, where is it? It's disappeared. Oh, no, it's not. Paper trading. You can actually open up a paper trading account, and what I would do is start the trading account with something you can actually trade with. It needs to be an amount that you could actually trade with. Some people I know trade, and they'll be trading a demo account of £100,000. Now I haven't got £100,000, so what is the point of me trading with £100,000? It's the most silliest thing anyone can do. If you've only got £5,000 that you could trade with, set the trading to £5,000, and within here you can set the individual trading balances, and I'll show you how to do that in another video. I just need to refresh myself on how you do that. I've not done demo trading for a long time, but so it needs to be an amount relevant to what you can trade with. Like I say, there's no, if you haven't got 10,000 to trade with, don't trade a demo account with 10,000 because it's absolutely pointless. When I first started, I did a trading account with about £150. Again, it's not worth doing, because what happens is you enter in a trade and you get taken out, which is obviously not what you want. But what happens is you leave a trade running, you have more of a risk, which you don't want. And what you end up doing is you end up leaving the trade to run for a considerable amount of time, because the movement in the market in some of these forex pairs is not big enough for you to actually take a profit that's worthwhile taking. If you're only taking, say, £2, £3 profit per time, you'll get incredibly fed up with it. Now, when I trade the futures, I'm only, every time the candle moves up by 1 point, I'm taking £2.50. And I know £2.50 actually isn't a great deal, but if I'm making 100 pips in a day, then actually that's worth doing. Definitely worth doing. So we need to go through the bare basics first, understand exactly what we're doing. What I will do in the videos, I'll show you what pips are, how the market is actually moving up, moving down, and hopefully by the end of these videos you should get a bit of a knowledge of what I do and how I do it. And hopefully, again, like I said earlier, these videos need to have some value to you, and potentially you could join me on this trading journey, basically. Okay, so enough waffle. I've been told that I waffle too much as well, so I need to stop waffling, which I will, and I will see you in the next video. Have a fantastic day.